Morning, it's Vijay here. Welcome to yet another episode of Pre Market Commentary. Today is Wednesday, 19th of March, 2025. Yesterday was a fantastic day. I was wondering whether yesterday the Nifty will cross the 22,700 and whether it could happen yesterday or some other day. And promptly it happened yesterday. And there was a lot of worry whether things will go better in the market because US markets were under pressure, but yeah, market took off independent of what happened globally because we were due for a significant bounce. So there is always a wall of worry. Something will be there to worry about. If you look at even those so-called experts, they always say there will be so many negatives during the year. And if you look at this is a wonderful graph for you to understand that so we have had bullish market since 90s, and this is a global index. So if you see from 90s, if you observe it closely, you will see various times we have had some or other problem. You had the dot-com boom in the 2000, and then the crash. Then you had another rally which went up to the global financial crisis, and then the market crash. And then you had Brexit, you had demonetization, you had elections, you had European problems, and then you went up, and then the COVID came, and COVID markets crashed, and subsequently they have gone up, and now we are talking about tariffs, we are talking about the war in Ukraine, the problems in the Middle East, and so on and so forth, and China putting some more barriers, and general kind of worries globally, geopolitical, fundamental, rupee, dollar, oil, name it, you have the worries. But these worries were the same whether you talk about 96, 99, 2000, 2003, 2004, 2008, when the global financial crisis came. And so you've been having this. So there is nothing new about these worries which we're having. So, one, if you have the faith in the Indian bull market, then I think one should not worry too much. Now, let's look at where our walls of worries are coming. Yesterday was the first wall of worry, which was the 22,700, and it has crossed beautifully. This is a daily chart of Nifty. It has crossed. The next wall of worry is the post budget high. So that is about 23,800. So that is what people will look forward to. That is the next big wall of worry. Then the following wall of worry is the worry which happened the peak of January first week. So this was February first week, January first week peak. Then if we cross that, then we'll be high for the will be higher for the year. Then we go further. The next one is the December first week peak. If we cross that, then we are going to attack the last wall of worry, which is the all-time high, which we saw in September end. So December first week we saw a peak. January first week we saw a peak. February first week we saw a peak. March first week we actually seen a bottom. As of now, it is a solid bottom in my opinion. So we will, I think, one of these days, not we will, most probably we will, that we will go and cross the previous wall of worries. And where we go, how long it will take is anybody's guess. But I'm fairly confident that we have got a tradable bottom, a significant bottom, because even today, everybody is looking at it as a dead cat bounce. But people should remember, a cat has got 9 lives. So maybe the bull market is not dead as far as India is concerned, because the dead cat bounce means it'll again have to go lower. If a cat has got 9 lives, if you believe in that theory, then we should go higher. So yesterday markets hit a 1 month high on all round gains. We had 47 stocks in the Nifty in positive territory, very, very rare occurrence. We've had 47 negative, but 47 positive is a very rare occurrence. Across the board, all the indices went up, and there's nothing really left behind, I would say. Volumes were high. The day before yesterday, the volumes were 75,000 crores. Yesterday was about 88,000 crores. Good volumes, though it has not yet reached the 100,000 crores. That is primarily because a lot of people are still nursing their wounds. There was good volume even in the F&O, and yesterday was the Sensex expiry, and it went off smoothly. I was thinking that there could be some volatility at the last half an hour. But last half an hour, there was no volatility. It just went up and up and up. So that is very, very good. Bank Nifty has done well. Sensex has Bank Nifty is the leader here. Sensex moved above 75,000, and market breadth was firmly in favor of advances 4:1, and that was very, very good. What did FIs and DIs do? For surprisingly, for once, FIs bought about 700 crores, DIs bought about 2,500 crores. Now, is it the beginning of a trend as far as FIs are concerned that they will continue to buy? One never knows. Actually, I don't care, because independent of the FIs, the markets have gone up. As I keep repeating, from 2015 to 2025, in these 11 years, 9 calendar years, FIs have been net sellers in the secondary market. So I don't think too much of importance should be given there. Then what happened to the global equities? They're really fascinating here. You saw the European markets doing well, Asian markets doing well, Indian market doing well, but look at the US market. US market was down. Dow Jones 300 points, S&P about 60 points, Nasdaq was 300 points. So all of them were down. So we have withstood, the world has withstood the onslaught of the bears which are now there in the US market. One way it is good, because now the FIIs or the investors in the US have come to realize that Donald Trump and his team wants a weaker stock market but a stronger bond market. Stronger bond market will mean low yields, which is good for India. Dollar, they are not so bothered, so which means dollar index will come down, which is good for India. If stock market is not good in the US, then the money will flow out like what it flowed out of India in September to February. It should flow in logically, and then we should go up independent of what happened in the US. People wonder, they think that if US is down, India has to be down. I will, over the weekend, show you a wonderful, fascinating graph where India outperformed the US over not 1, 2, but 6 to 7 years in the early part of the century. It is a fascinating graph. It is a wake-up call for all those perma bears who think US down, India will be down. Commodities, Brent is down $70. Gold is now trading comfortably about 3,000. Silver is comfortably trading above $34. So Gift Nifty is showing about 66 points up. I don't care too much for the Gift Nifty, but for academic purposes, it looks like we will have a gap up in the Indian markets. Today is a very important day as far as the central banker rate decision is concerned. In the next few hours, we'll get the Japan rate decision. I think they'll raise the interest rates, so there could be some volatility because of that. Eurozone will come with their CPI, and the most important thing tonight is the US Fed rate decision. Again, I don't think they're going to talk about any decreasing of the interest rates. I think they'll keep it status quo. That's what the market is thinking about. The commentary will be important, but that is what is important. Two things of the day: press conference after the Fed rate decision, so we'll know what the commentary there is. So that is what it is. So yesterday, as usual, we were bullish. Today also, I'll be bullish, but a little bit cautious, buy on decline. And I hope things will get only better from here. But whatever you do, I hope it is successful. Thank you for joining.